Alright, so for this week we're going to be looking at something a little bit more different. We're going to be looking at the foreign exchange market, and we're going to be looking at gold. So this ticker symbol is specifically euro to the US dollar. We have one of our indicators loaded onto the chart, and we're just going to look into this a little bit in depth. As you can see, we're looking at it from Wednesday, October 19th. Market went up, market went down, and market went up again. So very simple, very easy to read. If you understand how to trade, if you understand how this works, this is just very easy, and it will be very easy for you to use. So if you don't, I'm only going to zoom into the last trade of the week, which is over here, Friday, October 21st, around 9 o'clock a.m. We're looking at this on the minute chart. If you held on to this for the entire day, close out of the market closed, as you can see, the Forex market is open Sunday through Friday. Sunday 6 p.m. to Friday, I think it's about 4 p.m. on Sunday, 5 or 4, and it's open 24 hours during that time period, so you can trade it whenever you want to. That's the same as gold. So if we were to get into this buy over here with a standard lot size, you would have made close to $1,087, so $1,050, somewhere around there, from this one trade alone, from this day alone. Now, a lot of people do trade in the foreign exchange market if they have less than $25,000 and they can't open up a margin account. And they're still profitable. So if this was just $1,000 over here, imagine this, this. As we can see over here, the market went up, it dropped down, and this level of uncertainty, you could have re-entered into the market, so you could have gotten into many trades. So taking that into consideration, that's Euro USD for last week. And as I zoom out, as you can see, bearish trends, bullish trends, and yes, it's very, very simple and very easy to read. The thing about the Forex market is that you have to keep an eye on it. Now, if you have certain hours that you want to trade from, you can go ahead. A lot of people trade whenever they want to, whenever they have time. They might set alerts on their phone every time there's a trend change. But a lot of people also like trading standard options or stocks because the market hours are from about 9:30 to 4 o'clock. So those are usually the hours that people work. Instead of staying by your computer the entire time, instead of setting alerts, instead of waking up in the middle of the night if you don't want to miss a trade, they do that. But like I said, Forex market can set alerts every time there's a trend change with our indicators. You can trade as the trend changes, keep an eye on the market, and you can take it from there. But keep in mind that even if you do that, there are going to be moments where you might get notifications, where you might get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 notifications, 11. And it can get kind of annoying, especially if it's at 2 o'clock in the morning and you're jumping in and out of trades while you're laying in bed. Keep in mind, this is the Eastern Standard Time Zone. So this is Euro USD, as we can see over here. If you entered into this trade on Friday around 9 o'clock a.m. and just held on to it until the end of the day, you would have made about $1,000. Now let's jump into XAU to USD, which is gold. Again, very simple, very easy to read. As we can see, bullish momentum over here. If you would have got into this trade around the same time, 8:45, 9 o'clock, held on to it until the end of the day, that would have been about $3,000 with a standard lot size. Keep in mind that if you use a standard lot size, there is always a risk of loss too. So you have to keep that in mind. It's not only win or lose, so that's why you have to keep your stop losses very tight, very small, and close out at the right moment. So if this is about $3,000, you can do the math and you can see exactly how much it's going to be. Keep in mind all of our indicators are non-repainting, meaning they don't change colors. So this is the chart from Thursday. Let's just zoom back a little bit. Okay, this is Tuesday. As you can see, on Tuesday, if you sold over here, held on to it, possible retouch a few times. And back to this over here. A lot of people might have closed out over here, but if you held on to the trade, then you would have been more profitable. That's another thing a lot of traders need to develop, the ability to stay in trades for as long as it takes to make the most amount. Now, some people might get into a trade. Take, for example, if I got into a trade over here, and as soon as I saw it coming up, I might have exited the trade. But a lot of and I could have re-entered over here. I could have exited over here, and that would have prevented me from making all of this. So that's a skill set that's developed with time and practice, usually with a mentor. So if we just keep on scrolling back a little bit, do a little back testing, as we can see over here, a lot of movement, easy to read, simple. It will take practice, will take time. You have to be very careful with movements like this. Very quickly the market may drop. This happened in a matter of 2 minutes, so it's important to set your stop losses. And yeah, that's it for this week. So this week we were looking at Euro USD, and we were looking at XAU to USD, which is gold.